I've got a start today of the show of questions that people ask you when they walk through the door. So here are the top 4 according to this survey. Number 1, am I protected against a market downturn? Number 2, am I going to outpace inflation? Number 3, are you going to meet my goals? And number 4, how do I preserve this money and pass it on? Do those sound like questions people are asking in one way, shape, or form? Or are we missing a whole lot here? What do you see?
Well, I mean, they're definitely asking those questions. It's not unusual for people to come in and not even sure whether they have enough money to retire, which is always a scary notion. But the main question from our perspective that's truly missing is nobody, for the most part, nobody's asking about taxes now. And I say that's a typical conversation that we always want to bring up taxes when people come to us from the radio show and television and some of the things we do, because we focus so much on taxes. We usually know that's part of the conversation. If somebody's just looking for, growth in the stock market and just wants to swing for the fences, they don't come to us. They go to those stock jockeys wherever they happen to be. But if somebody wants to actually have a comprehensive plan, right? I mean, what we call true financial planning. I just had some clients come in the other day, Mike and Barbara. It was interesting. They've been working with, the people who had held their 401k. It was just kind of crazy. And the 401k people told them, I'm not blasting Fidelity. It's typical stuff. The 401k was Fidelity. When he retired, he got on the phone with his Fidelity guy and said, hey, what do I do with my money? And the Fidelity guy said, we just roll it right into the IRA. It was a perfect solution. No problem. They rolled it right into the IRA. And he wants to start talking to him about taking money out. And the guy said, sure. How much do you want to take out? And the guy said, I heard, Mike said, I've heard about that 4% rule. And the Fidelity guy said, okay, fine, we'll set it up. And no conversation, no thought about, is it the right amount of money? Are we taking it from the right boxes, right? Because just like everybody understands, you have to allocate your assets along non-correlated asset classes, right? You don't put all your eggs in one basket from an investment point of view. Why would you have all your eggs in the same basket from a tax point of view? And when Mike came in to talk to us, the first thing I asked him, I said, well, you're working with Fidelity. Why are you coming in here? I mean, Fidelity, they've managed your money for all those years with the 401k. And now that you're retired, you rolled your money over to them. Why are you here now? And the first words that came out of his mouth was, well, they really didn't have a financial plan. What he told me was, most people my age do this, which is always kind of scary because, where most people may do that, I'm not most people. But the second part about it was the guy didn't talk to him about taxes at all. And that was a concern from him. He was worried about how much he was going to lose to taxes. He had heard about that wacky thing called IRMA. So he was a little bit nervous about what was going to happen with Medicare premiums and Social Security. Was this Social Security going to be taxable? He had all those questions when he came in the door. And quite frankly, if you're looking at retirement or you're just entering into retirement and you have those questions, you're trying to figure out, are you protected from a market downturn? Can you outpace inflation? Do you have enough money to meet your income goals? Are you taking enough risk? Are you taking too much risk? And quite frankly, is there going to be anything left over? And at the end of the day, how tax efficient am I? If you have those questions, if you're thinking about those things as you enter into the beginning of 2026, sit down with Ryan, myself, and our team. We will show you how to create income streams you'll never outlive. We're going to talk to you about long-term care. We're going to talk to you about estate planning. We're going to talk to you about the fees you're paying. We're going to talk to you about how much risk you're taking. And quite frankly, folks, at the end of the day, taxes do matter. Stop losing 20 to 30% right off the top of your income each and every year to the tax man.
And Ryan, when I look at this list, it seems like people are looking at you and saying, protect me. Protect me against the market, protect me against inflation, make sure my income is there, protect me against Uncle Sam and estate taxes. It's like you got to be kind of a shield because there's so much uncertainty out there. And I think that's probably one of the reasons people go into retirement with so much anxiety, because there's a lot of uncertainty out there, isn't there?
Yeah, I mean, the most common theme, aside from people coming to us because they don't have a proper tax plan in their financial plan, is that they have a fear of running out of money.
Number one fear.
Yeah, they have a fear that they are going to outlive their money, and they want to make sure that their plan accounts for it. Because most times, like Mike and Barbara, they were working with Fidelity at that point. They asked Fidelity about their retirement plan, and Fidelity ran them the same Monte Carlo simulator that pretty much every financial planning company out there uses. It just is rolling the dice saying, here's your probability of retirement.
63 pages.
And it does a great job of showing you if the stock market overperforms, here's your chance of success. If the stock market performs on average, here's your chance of success. If the stock market underperforms, here's what happens. But in none of the scenarios were they ever told, here's exactly where your income's coming from. Here's exactly how to make your income last. Here are other tools aside from just being reliant upon the stock market to give them 6%, 7%, 8% over time to make sure that they had their money. It was basically just, yeah, your retirement's going to go on a hope and a prayer. And Mike and Barbara really wanted something to give them this sense of security of knowing that no matter what happens in the market, whether the stock market's going up 20% or down 20%, they would have the income that they need. And, really what they were looking for was the ability to transfer the risk of retirement. Even though that my Monte Carlo simulation says I have a 90% chance of success, there's still that 10% chance that I'm going to run out of money in retirement. And they wanted to eliminate that risk. They wanted to transfer that risk to somebody else. And really one of the best ways you can do that, in my opinion, is by using an annuity. You transfer that risk to the insurance company. They take on all the risk of making sure that your money lasts. And in exchange for that, they give you a monthly income number, yearly income number that is a consistent number that just like your Social Security, just like your paycheck, just like your pension, is going to come in every single month, no matter what happens to the stock market. Like I said, whether it's up or down. And ultimately, that's what people are looking for, because you spend 30, 40 years of your life working a paycheck, having that paycheck come in every single month. That's what you want with your retirement income, having that predictable number.
And it was interesting when Ryan and I were talking with Mike, he had heard the word annuities and his eyes kind of rolled back in his head. And his concern was that, well, if I put all this money into an annuity, like you guys are suggesting is an option, and what we always do is we show you all your options, because there's really several different ways to create income. But Mike's concern was, if we stick money into this annuity, I'm just giving it to the insurance company. And what happens if I die tomorrow? I don't get it back. And we had to explain to them that, just like finding the right doctor, just like finding the right, lawyer, just finding the right tax advisor, finding the right financial planner is important, right? Understanding how these annuities can work. You don't have to give an annuity company your money and never get it all back. I mean, there's ways to make it all happen. You just have to have the right tools to present to and the client has to understand that they do have options. You can't go to a one size fits all. And no disrespect to Fidelity, they do a great job of what they do, but they have really a very narrow focus on what they're allowed to provide services wise, which is why Mike and Barbara came to a financial planning firm that can actually look at the big picture and provide true holistic financial planning.
And that's kind of the bottom line that everybody is looking for is, I want a complete financial plan. I don't want a plan that's just focused on investments. I want something that's thinking about the tax ramifications, thinking about life insurance, thinking about long-term care, thinking about my estate plan, because, it's all well and good that I've grown my money to this point and we keep growing the money, but how do I preserve it? How do I protect it? How do I distribute it? How do I do it as tax efficiently as possible? And if you feel that this is something that's missing from your financial plan, or you're wondering why your advisor isn't talking to you about these type of things, I encourage you to go to our website, thesavvyinvestorradio.com. That's thesavvyinvestorradio.com. Right at the top of the page, there's a button that says schedule my call. It takes you directly to our calendar. You can pick a time that works best for you. That's thesavvyinvestorradio.com.